Hi there, you're watching Market Cafe on ET Now with me Shreyanshi Singh, and with me as always is Snehisha. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep an eye on, and tell you what the brokerages are saying as well. But Snehi, first up, let's take a look at the international handover then.
Well, absolutely, and the biggest thing that we have to talk about today is the outcome of the FOMC meeting. We'll of course take you through that in extreme detail later in the show, but just to brush up, stock futures advanced on Wednesday night as investors looked ahead to more corporate earnings due today and the key labor data set for later in the week. Now, those moves followed a choppy day on Wall Street as investors reacted to the Fed Reserve's decision to keep interest rates unchanged. In the closely watched press conference, Fed Chairman Jerome Powell essentially ruled out an interest rate hike as the central bank's next move, despite few recent signs of easing inflation, and we'll brush up on this later as well. And all three major stock indices leapt by more than 1% at their highs of the day, but they also cooled off significantly by the close of last night's bumpy session. The Dow finished about 0.2% higher, while the S&P and Nasdaq have both closed the session lower in the red by roughly 0.3%. Now, in after-hours trading, chip maker Qualcomm rose by more than 3% on better than expected adjusted earnings and strong revenue guidance. Restaurant delivery service DoorDash dropped 15% on the other hand after reporting a wider loss per share than Wall Street forecast. Investors then today will watch out for economic data on weekly jobless claims, first quarter worker productivity and unit labor costs, as well as the March figures on the trade deficit as well as factory orders. Now, those releases all come ahead of tomorrow's closely watched April's jobs report. Remember, the weekly jobless claims reports will come tomorrow as it does every Friday. And today's quarterly earnings reports are dominated by Apple and Amgen after the market close, after Wall Street closes, alongside Coinbase and DraftKings. Now, before the market opens, Moderna, Peloton are both scheduled to post results. So, well, this is largely the handover that we're seeing coming in from the US markets. Not much to worry about. Slight bit of a cut coming in on S&P as well as Nasdaq, well as Dow has closed the green positively in session positively in the green, but just by 0.2%. On the other side now, when I shift focus and let's talk about what the European markets are doing, and well, they're not doing well at all, because yesterday's moves are looking rather somber when it comes to European markets. DAX has closed down by a whole percent, FTSE is down 0.3%, and the Pan-European Stock 600 is also down 0.1%. So not much to worry when it comes to Stock 600, but yes, DAX has closed the day lower by 1%. But on the other side, Shreyanshi, also take us through what's happening in the world of gold and oil, what's happening with it.
Absolutely, and we've seen quite the moves coming in for oil, right? We've seen that tumble coming in for oil prices. Now, when you look at US oil prices, they tumble more than 3% to $79 a barrel, the lowest level in 7 weeks, as crude stockpiles surged on lackluster demand. So, when you look at the WTI contract, then that was around $79 a barrel and was down 3.5% thereabout. Year to date, though, when you look at the contract, that is up 10.2%. When you look at Brent, then that is also around that $83 a barrel mark, and it also fell around 3.3%. And year to date, same picture for Brent as well. The global benchmark is up 8.3%. Now, US commercial crude oil stockpiles, which exclude the Strategic Petroleum Reserve, surged by 7.3 million barrels to 461 million barrels total last week, according to the EIA. And when you look at the refiners' utilization rate as well, that has fallen as demand for gasoline has been below 9 million barrels per day for 4 weeks now. So that largely is the picture coming in for oil as well. Now, when you switch focus to gold, then gold prices rebounded after the US Federal Reserve kept its benchmark interest rate unchanged, and a pullback in the dollar as well as the US Treasury yields also prompted some bargain hunting meanwhile. So that largely is the kind of move that we saw coming in for gold as well.
Absolutely, and with that, let's also take a look at all the important events that we need to be watching out for in today's trading session, and lots of important stuff to watch out for, because when it comes to our markets, we are expecting the S&P Global Manufacturing PMI today, and well, of course, today being a Thursday is the Nifty expiry as well. But let's shift focus and talk about US. Like we mentioned earlier, initial jobless claims as well as trade data due today. From Eurozone, then you also have the S&P Global Manufacturing PMI numbers coming out as well. And let's talk about back home. From the earnings pack, you have Coal India, Adani Ports and SEZ to report their numbers today, among a whole host of other companies as well. And in terms of corporate action, then today is the last day to buy shares of 361 WAM to be eligible for their dividend. And Ajanta Pharma will also be a stock in focus today, because that board is going to meet today to consider their share buyback. Lock-in period is going to be ending for two companies today. IRM Energy 24% equity coming out of lock-in, as well as Honasa Consumer 49% equity coming out of lock-in as well. In terms of other news, then Amazon Great Summer Sale to begin in India, and the Apple earnings will be released today, and UK will be holding its local elections today. So we'll watch out for all of these important cues in today's trading session.
Absolutely. And speaking of important cues, then kickstarting the morning with the FOMC meet outcome that took place yesterday, the Fed has decided to keep the rate steady for the sixth straight month. It has also essentially ruled out an interest rate hike as the central bank's next move, despite few recent signs of easing inflation. Now, when you look at the commentary coming in from Jerome Powell, chairman, he says that they're not greater confidence on inflation so far this year. He also added that regardless of the upcoming US presidential election this year, the central bank continues to make its interest rate decisions independently. Let's also listen in to what else he had to say on the rationale for rate cuts.
The FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. We do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate.
Well, all right, that's the word coming in from Fed Chair Jerome Powell, who says a rate cut is not likely in the next meeting as well. But let's shift focus. Let's take a dive into the global earnings. The Starbucks and Qualcomm have also posted their numbers. Starbucks has missed expectations across the board, posting lower than expected revenue, earnings, and same-store sales growth as customers cut back on the frequency of visits as well as the size of orders. On the other hand, Qualcomm has surpassed Wall Street expectations, providing a strong guidance for Q3.
All right, then keeping it with US job openings dropped to the lowest level in more than 3 years in the month of March. The Labor Department reported that employers posted 8.5 million vacancies in March, down from 8.8 million in February.
All right, with that, that's a wrap on all the global stories we've been tracking for you this morning. So viewers, we'll slip into a short break, but when we come back, we'll take a look at how the Asian markets have opened up. So you stay tuned.
Hi there, welcome back. Well, as promised, let's take a look at the Asian markets then. Asia Pacific markets largely on the back foot right now, and this is after the US Federal Reserve opted to hold interest rates steady at the end of its two-day policy meeting. That is something that we talked about earlier as well, but let's take a look at the price action coming in from the Asian markets. Then when you look at Nikkei, that is in the red on your screens, down about 0.3% thereabout. And when you look at Kospi also, not a lot of strength coming in there as well, because Kospi is down 0.3%. Now, mind you, investors also passed through consumer prices data from South Korea, which showed a slower rise in April from March. And right now, Kospi on your screens down 0.2%. When you look at ASX 200 as well, what you're seeing there a little bit is that there's a little bit of strength there for ASX 200. Up just about 0.4%. When you look at Hang Seng as well, up about 0.2% thereabout, currently up about 0.3% on your screen. When you look at Shanghai then, that is on the back foot a little bit, and that is also down 0.3% right now. But when you look at our markets back home, now we did close around the 22,604 level, and what you're seeing based on the Nifty implied is a very good start. That is what is being penciled in, especially on a spot basis and also on a futures basis. A decent start is what we're looking at this point.
Well, absolutely. Gap up on the spot is what we're looking at. So we can hope for a very good trading session today, although we're getting some mixed global cues. So we'll just have to wait and watch out for what today's session looks like. But viewers, with that, here's the news for the year.
Welcome back. Thank you so much for staying tuned in. Well, let's get a little more stock specific then. And it was an inline set of numbers for Indus Towers for the quarter gone by. When you look at profits and margins, they both rose on a quarter-on-quarter basis. Somit is standing by with the earnings fine print. Somit?
Well, if you see Indus Towers in the fourth quarter has reported pretty much inline set of numbers. Now we are seeing a growth when it comes to the EBITDA and net profit front, but that is largely on the back of a one-off, and that was owing to a reversal of a provision that the company had made earlier of around 370 odd crore rupees. If you remove that, the numbers are largely flat on a sequential basis. On the balance sheet side, if you see the receivables of the company also did inch up on a sequential basis by around 430 odd crore rupees. But on the positive side, if you see, this is the fourth consecutive quarter where the company has reported a record net tower addition. Now, additions were largely on the back of Airtel's accelerated rollout when it comes to increasing its rural network, and that has been aiding Indus Towers for the past few quarters. The higher tenancy, however, the higher tenancy additions were offset by lower rentals, and also one of the things on the negative side was the company yet again skipped out on giving any dividends to the shareholders for the second consecutive years, and this is on the back of lower cash flows that the company has been seeing and higher capex that it has been doing so far. On the conference call also, management did say that as and when the cash flow situation improves, they'll again reinstate the dividend payment going forward. Now in the fourth quarter, the management also said that they did manage to get 100% of their collections, and one of the dues which is pending from one of the players is expected to clear soon, given the fact that Vodafone Idea has done its fundraising, so they're expecting the funds to be cleared soon, and again yet the company would reinstate that dividends. Also on tower addition, the management said that they're expecting the tower addition momentum to continue for a few more quarters, which means that despite the fact that the company managed to add record number of towers in the fourth quarter, this might continue for the next couple of quarters as per the company. However, the numbers are pretty much in line with street estimates. The growth that we are seeing is largely on the back of one-off reversal that the company did in the fourth quarter.
So, I mean, thanks so much for taking us through that. So, Indus Towers is going to be in focus on the back of its numbers. But another stock that will be in focus today is going to be Indigo. And let's take a look at Indigo's con call highlights. The company has bagged 30 firm orders and 70 optional for A350 wide-body aircraft. So, I mean, take us through all the key takeaways from this con call and tell us why Indigo will be in focus today.
A few days back, Indigo did announce this order of around 30 wide-body A350-900 aircraft. So on that, to give more details to the analyst community, the company held a conference call in which we understand that the order is for 30 aircraft. However, they also have an option to increase it by additional 70 aircraft, and the deliveries of this aircraft are expected to start from 2027. Now, the reason behind this order is the fact that India just has 70 wide-body aircraft, and the demand for the same is expected to increase going forward. The management also said that it's not only the capacity share of the Indian Airlines which is low, but also the revenue market share, and hence they are seeing a lot of growth opportunity on that front. Now, they also said that they aim to expand their total fleet size to 600 by 2030, which is nearly double of the current fleet size, and this cannot happen by the company by keeping only one type of fleet. Hence, they're adding this new type of fleet, which is a wide-body aircraft, which will complement the narrow-body aircraft going forward. The management also reassured that the A350 order is not only impactful and meaningful, but also cautious and prudent from their side. However, the company is yet to decide on the configuration, product offering, route, destination mix so far, and they have even not yet decided whether their offering will be as a low-cost carrier or a full-service carrier. So these details are yet to come out from Indigo on this wide-body aircraft that the company has done. Apart from this, if you see, the management also said that the wide-body aircraft would have a longer lease tenure, and financing will take account of that. However, they are yet not decided of how the ownership will be, whether they will completely own the aircraft or will it be on an operating lease. Now, they also said that the A350 are all powered by the Rolls-Royce Trent engines globally, and Indigo is developing a new and strategic relationship with Rolls-Royce. So there could be some announcement on that front also going forward. And lastly, the management also said that they are looking to enhance the card program even further going forward. So keep an eye out for Indigo in trade, because that stock has been gaining on the back of increasing air traffic, and this new wide-body aircraft could just add to that momentum for Indigo.
So that's about Indigo then. But while you're with us, let's also take a look at Saudi propane prices that have been cut for the month of May, and the new prices will come to effect from June in India. So how will this affect Gujarat Gas then? Take us through that analysis as well.
If you see, Saudi Aramco has on a monthly basis they revise these prices, and for the month of May they have revised the propane prices downwards by around $35 per ton is the cut that they have done on a month-on-month basis, and the new prices are $580 per ton, and this new prices will be applicable in India with a 1-month lag, which means that these new prices will be applicable from the 1st of June 2024. Now, as per analysts, because of this recent cut in the propane prices in Morbi region of India could be lower by around 2.3 rupees per SCM. Now, already for the month of May, if you see, propane prices have been reduced by around 0.5 rupees per SCM because of the price cut that we had seen earlier, and the current propane prices in the in the Morbi region of Gujarat stand at close to 45.8. Now, this is as against the gas prices which stand at 44.7. But after the cut of 2.3 rupees that we're expecting to happen in the month of June, propane would again become cheaper as compared to gas, and this could hamper the volumes for Gujarat Gas in the Morbi region. However, if you see, Gujarat Gas's current procurement price of gas stands at around 38 rupees per SCM, while the company is selling this gas to consumers at around 42.2 rupees per SCM. Now, this is excluding the taxes that has been charged by the government. So, this shows that the company also has some headroom to cut down gas prices going forward. Now, if they reduce the gas prices to make it at par with propane, obviously their volumes would remain intact, but margins could get impacted. However, analysts also believe that gas prices could fall going forward, and every $1 per MMBTU drop in spot prices can largely offset the drop that we are currently seeing in propane prices. So keep an eye out for Gujarat Gas in trade.
All right, Somit. So Gujarat Gas is yet another stock that will be in focus today. Thanks so much for taking us through that. Let's move on then and talk about Ambuja Cement, because that has come out with its quarter 4 numbers. Let's go across and listen in to Ajay Kapoor, CEO and whole-time director of Ambuja Cements, who takes us through the earnings. Listen in.
In addition to our branding effort, we have had robust and notable involvement with the technical and end users. Through our technical services, we are supporting ethical and environmentally friendly building practices, making a significant positive influence on society at large. While we have set out to achieve our long-term objectives, we are committed to sustainable growth with focus on water governance, sustainable livelihoods, women empowerment, uplifting rural infrastructure, and championing social inclusiveness. 3.3 million people benefit from our community development projects. The cement industry's outlook remains positive, driven by pre-election spending, ongoing government emphasis on infrastructure and development, and sustainable real estate activity. The industry is expected to witness another wave of strong demand as the normal monsoon season is predicted this year, fueled further by the higher budgetary allocation to the infrastructure and construction in the interim budget 24-25, as well as the green energy transition. This demand momentum is expected to sustain going forward. Looking ahead, we are optimistic about the future and are committed to sustaining this momentum. Ambuja Cements will continue to leverage its strengths, explore new opportunities, and uphold the highest standards of corporate governance.
All right, well, that was all about Ambuja Cements. But moving on then, the Godrej family has sealed the deal to split the 127-year-old conglomerate into 2 branches. Adi and brother Nadir will control the listed entities, while cousin Jamshed will be at the helm of unlisted companies and their affiliates. Godrej Industries Group, which includes the listed companies Godrej Industries, Godrej Consumer Products, Godrej Properties, and Godrej Agrovet, as well as Aztec Life Science, will be controlled by Adi, Nadir and their immediate families. Now, Piroj Shah, Adi's son, will be the executive vice chairperson of Godrej Industries Group and will succeed Nadir as the chairperson in August 2026. Meanwhile, Godrej Enterprises Group, comprising Godrej and Boyce, and its affiliates, of course, as well, will be controlled by Jamshed as chairperson and managing director. His sister Smita's daughter, Nairika Holkar, will be the executive director as well. Let's go across to Aishwarya for more details on all of this. Aishwarya, take us through all of this.
Well, it's a big day for the Godrej clan. Now, the organization structure as well as ownership, that's something that we need to look out for. First off, let's talk about Godrej Enterprises. That will be headed, of course, by Jamshed Godrej as well as Nyrika Holkar. They have companies such as the Godrej and Boyce and affiliate companies. They also operate in various sectors such as construction. They also have space, aerospace and defense, and this is part of this particular clan. Let's talk about the other clan, which is headed by Adi and Nadir Godrej and other family members as well. That is under Godrej Industries, and going forward we'll see these listed entities under Godrej Industries, which includes Godrej Consumer Products as well as Godrej Properties. Aztec Life Sciences are some of them. We'll see how the market reacts to that going forward. But one key thing to note here is the non-compete agreement, which is applicable for the next 6 years, which means both the parties will not be allowed to enter any of these sectors or not compete with each other, especially for the demarcated sectors that they operate in so far. But post 6 years, which means post 2030, both Godrej Enterprises as well as Godrej Industries will be able to enter each other's territory per se, and sort of also build brands in different sectors. But the catch here is the name will have to be a non-Godrej name, which means the tag Godrej will not be attached to it. They will have to come up with fresh brand names after 2030. The other part is Godrej Properties, which has a shared understanding in terms of revenue between Godrej Construction as well as Godrej Properties. Now, so far it's always been 90% to 10% revenue share between Godrej Construction as well as Godrej Properties, and it has been limited to the developments made in the Vikhroli region. As far as the other regions are concerned, Godrej and Godrej Construction, the lands that they own and the developments that they make apart from Vikhroli, apart from that approximately 3,000 acre land in Vikhroli, all the developments and their proceeds, revenue, profits will go 100% only to Godrej Construction going forward. So all in all, this is the whole idea of the announcement and the split as well as revenue sharing model as we've seen. Back to you.
All right, thanks Ashwarya for that update coming in. But let's also delve a little deeper into the split then with H.P. Ranina, the lawyer at Supreme Court, as well as Sanjay Escher, who works at Crawford Bailey and Company. So let's take a look at what they had to say as well.
Well, the regulatory approvals will be gone through, because when there is when the properties are split, obviously you have to register in the name of each of those companies. So there may be stamp duty implications, registration implications, and generally all these will have to be gone through. I'm sure they have factored in the costs involved, both the legal costs as well as the financial costs when they make a split of these assets. So certainly there will be certain consequences, financial consequences, and they have been factored in every split. So this will go through and they will have to bear the costs. And obviously there will be some disputes in that, in valuation.
6 years is good enough a time for anybody in case is starting a new operations to develop a new name, and it's a exercise and it's a process. So 6 years time, all parties concerned, including the operations business guys and the owners, that look in next 6 years time, in case there is any plan to start a new business, a new brand name is developed simultaneously, so that there is a seamless transition in that sense for any new businesses.
All right, that's the word coming in from experts on this split. So on the back of this split, Godrej Industries, GCPL, Godrej Properties, Godrej Agrovet and Aztec Life Sciences, which are all the listed companies under the Godrej Group, will be in focus today. But let's shift focus, talk about some GST numbers coming in. Driven by a strong increase in domestic transaction and imports, GST collections have hit a record high in April this year at 2.1 lakh crore, registering a significant 12.4% year-on-year growth. After accounting for refunds, the GST revenue for April stands at 1.92 lakh crore, reflecting an almost 17% growth compared to the same period last year. My colleague Sumit Chaturvedi is here to break down these numbers for us. Good morning, Sumit. Take it away.
Well, for the first month of financial year, it's a good news for the economy, and the net collections of GST, they have been very bullish, crossing 2 lakh rupees mark and breaching rupees 2 lakh crore rupees mark. And let's talk about the numbers. And here the April GST revenue collection has been highest ever, and SGST has been 53,338 crore, CGST 43,846 crore, and IGST 99,623 crores. The main reasons are three: domestic transactions that has seen a jump of over 13.4%, imports have gone up by 8.3%, and certain analysts are saying it's also showing the formalization of economy that is doing well, and that's showing the numbers. Also, certain GST audit transactions for audit deadline is there, and that is why the GST collections are also looking upwards. That is the news coming. And if we talk about the state-wise collection, Maharashtra collected highest GST. It is at 37,671 crore rupees, followed by Karnataka 15,978 crore rupees, and Gujarat at 13,300 crore rupees, UP 12,290 crore rupees. So good news coming for economy in the first month of financial year. Clearly, it gives the leeway to the government to spend more, and the GST collections, we have seen that they have crossed on an average 1.6 lakh crore last financial year.
All right, thanks Sumit for that roundup coming in on tax collections then. But moving on, Jindal Stainless has announced a three-pronged investment strategy worth nearly 5,400 crore rupees. The company has also entered into a joint venture in Indonesia for developing a stainless steel melt shop. Listen in to what Abhyuday Jindal, MD at the company, had to say about this as well.
So the actions is always like quality control order is always a welcome step by the government, that actually good quality material is coming into India. Our consumers, our people are consuming the right grade of stainless steel, and not only stainless steel, any other item that is coming into India. So that is one step that we are working very closely with the government to protect our borders. Then always there's a talk on anti-dumping. There is clear severe dumping that is happening, so we do need to protect the MSMEs. They are the ones who are suffering the most. They are the ones who are not able to compete with global companies, compete with Chinese companies. So that is required.
All right, so Jindal Stainless will be in focus today, but yet another stock that will be in focus today is Kotak Mahindra Bank, because KVS Manian has stepped down from his post of joint MD of Kotak Mahindra Bank with immediate effect. Remember, he had been redesignated to this post on 1st of March this year. Ankur Mishra is here with more details. Ankur, what calls for this stepping down? Help us understand this.
Yes, KVS Manian has tendered his resignation from Kotak Mahindra Bank. As far as the reasons are concerned, we understand through sources that he wants to pursue other career options in financial sector itself. Now, this has given rise to speculation that he is going to join a leading private bank. However, there is no confirmation on that front. Now, as far as his resignation letter is concerned, we understand that he has clearly mentioned in the resignation letter, which has been written to MD and CEO on 30th of April, he says that I want to pursue opportunities in the financial sector. And this resignation letter is dated 30th of April. But interesting thing is that it was accepted on the same day, which was the comment which was given by MD and CEO in a reply to that letter. And hence, after that, Kotak Mahindra Bank has informed through statement that there is a reorganization which is there in the bank, and the departments which were there with KVS Manian now moves to MD and CEO Vaswani. In fact, Vaswani himself was appointed in the bank this calendar itself from 1st of January. Now, it will be interesting to see as far as Kotak Mahindra Bank to see whether or not there are further elevations in the company or this reorganization stands.
All right, viewers, with that, we'll slip into a very short break on this edition of Market Cafe, but you stay tuned because we'll be right back with more stock-specific news and updates. We'll see you after this break.
Thank you so much for staying tuned in. Well, let's take a look at channel checks for April, and they suggest that chemicals have seen some price changes on a month-on-month basis. Now, what will be the impact on chemical stocks then? Sharad is joining in with the answer. Sharad?
In focus is chemical price of channel checks, and this is as per report by Centrum Broking. Firstly, acetic acid, that is up almost 4.6% on month-on-month basis, which is positive for GNFC, while negative for Jubilant Ingrevia and Lakshmi Organics. For looking at caustic soda, The number is almost 5% up month on month, negative for Deepak Nitrite, JNFC, JSFC, while it's positive for Grasim and DCM Shriram. Soda ash, the Chinese prices, that's down almost 4.3%. It's negative for Tata Chemical, but do remember these prices, especially the domestic prices, is not connected with the Chinese prices. Phenol acetone spread, that's up 7%, which is positive for Deepak Nitrite, while palm kernel oil, that's up 6% month-on-month basis, which is negative for Galaxy Surfactants. Also, the fluorspar that has jumped up as high as almost 7.6% on a month-on-month basis, which is positive for Gujarat Fluorochemicals, SRF, and Navin Fluorine. While the TDI toluene spread that is down almost 17% on a month-on-month basis, which is negative for GNFC. Caprolactam and the benzene spread that is down 4.2%, and that's negative for GSFC. And lastly, the ethyl acetic acid spread that has expanded almost 41% on a month-on-month basis, which is negative for GNFC, Jubilant Ingrevia, and Lakshmi Organics.
All right, Sharad, thanks so much for taking us through that. Let's move on, talk about Jindal Stainless, because that stock will be in focus on the back of a recent 5,400 crore investment that the company has seen. Let's go across to my colleague Ashesha to make sense of what this investment is and what are the company's plans going ahead. Ashesha, over to you.
Jindal Stainless has approved strategic investments to the tune of 5,400 crores, which will help in increasing capacity of the company. Now, this total 5,400 crore strategic investment has been broken down into three parts. One, the company said that they will be investing 700 crores in a joint venture for 1.2 MTPA stainless steel melt shop in Indonesia. Now, this plant is expected to be operational within the next 24 months, and company says that Indonesian JV will get the best of speed and raw material security for the company. The second part is an investment of about 3,350 crores for expansion in downstream capacity here in India. This 3,350 crores is further broken down into two parts. One, 1,900 crores will be for increasing melting capacity, and the balance of 1,450 crores will be used for other associated upgradation of infrastructure facility. Lastly, let's also talk about the balance 1,340 crores, where the company said that they will be acquiring nearly 54% stake in a company, Chromeni Steels in Mundra, Gujarat. Now, this has capacity of about 600 MT. So, there are three parts to the total 5,400 crore investment that the company has announced. Now, analysts are very positive on this investment. They say that the investment is positive as it will address growth concerns FY27 onwards. As far as the funding of this is concerned, analysts also say that EBITDA estimates of about 6,000 crores per annum have been penciled in for FY26 and 27, and hence they do not expect any cash flow problems to fund this investment. So, all in all, very positive that has come in. Analysts are also very positive, and they do not expect any cash flow problems in order to fund this 5,400 crore investment.
All right, thanks Ashesha for that update coming in on Jindal Stainless. But let's zoom out a little bit and take a look at some investment mantras. Then market guru Vijay Kedia shares his investment rationale for the current bull market, says investors should chase the story behind the stocks. Let's listen in to what he had to say then.
They will never buy. They are fence sitter. अब पेविलियन में बैठ के बोल सकते हो गेंद को ऐसे खेलने का था, ये गेंद को ऐसे खेलने का था, तो पिच पे जाकर खड़ा होता तो मालूम पड़ेगा जब 140 की बॉल आती है तो कैसे फील होता है. तो जो छूट गए ना वो रूठ गए. उनके मन में यही आ गया, यही आएगा कि अभी ये बाजार घटेगा. अरे कितना घटेगा? 10% घटेगा तो मैं ले लूंगा. अरे 10% तेरे बाप का माना क्या भैया? 10% नहीं घटेगा.
When 10% comes down, you will not buy.
You will not buy. उसमें आपको लगेगा नहीं तो डूब गया.
15 हो जाएगा,
15 हो जाएगा, 20 हो जाएगा, तो आपको कभी लेना ही नहीं है. देखो, दो तरह का रिग्रेट है बॉस लाइफ के अंदर में. एक रिग्रेट ऐसा होता है कि आप शेयर्स ले लो और शेयर्स गिर जाए, आपको रिग्रेट होता है. एक शेयर्स ऐसा होता है कि आप शेयर्स नहीं लो और शेयर्स बढ़ जाए, वो भी रिग्रेट होता है. रिग्रेट तो आपको लेना ही पड़ेगा लाइफ में. कौन सा रिग्रेट आपके दिल के करीब है, ये आप सोच लो. मेरे लिए वो रिग्रेट ज्यादा अच्छा है कि मैंने लिया और शेयर गिर गया. ठीक है, मेरे को तकलीफ होगी, लेकिन मैं नहीं लिया और शेयर बढ़ गया, वो मेरे से रहेगा.
क्या बात है, क्या बात.
तो मैं
तो लाइफ में लुक बैक करके we should always not feel bad as to what we wanted to and we never did.
Yeah.
So the risk in this market of not investing is a bigger risk rather than the risk of the fall.
Yes, exactly.
So in a bull market like this, say, ki there are two ways in which you can do it. Way number one, you can wait for the correction, and wait number two, that you buy with an assumption that there could be 15-20% downside, but eventually it will be higher.
That is the best practice here. Nobody can defeat you. Just to think that I am buying the shares at any price and it can fall 15-20%. फिर आपको कोई नहीं हरा सकता यार.
So more money is lost in
Then
waiting for the correction
yeah.
rather than when the correction actually
The
happens.
correction actually happens.
तो ये आप implement करते हो.
Yes.
If you like idea, you just buy it.
100%. वो नहीं लूंगा तो मेरे को रात को नींद नहीं आती भाई.
And if you don't have capital that time, how do you buy?
तब तो फिर तमाशा देखो फिर और क्या है. पैसा नहीं है तो फिर आपको.
But are you fully invested?
Yeah, I'm fully invested.
All right, let's move on then and listen in from Lawrence Balanco, the technical analyst at CLSA, and he shares his views across various stocks and sectors. Listen in to his rationale.
Well, it's quite interesting. If you look at the PSU banks, for example, that's been the big relative group leading the broader banks index since the 2020 lows. And we think from a longer term perspective that PSU banks will continue that re-rating. If you look at it, they've barely retraced half of their de-rating that they've seen from the highs, the relative highs that is, that they made back in 2013. So State Bank of India is still, a key longer term breakout candidate, which is currently in a holding pattern, but we think does trade higher. And then on the private sector bank side, I do think RCICI is sort of best positioned the way that its trends traced out. And then Axis Bank's recovery that you've seen over the past week does set it for a continuation of the breakout. And then you've got Kotak and HDFC, which over the past 2.5 years have been trapped in these very broad trading ranges. For HDFC, quite interestingly, we see that trading back towards the top of that range, towards the 1700, where Kotak remains in the lower half of its trading range. So again, we reiterate this point about the sort of dispersion of performance and being more selective down to the stock level.
How much more for IT stocks to consolidate before their corrective phase is over?
I don't even think we've seen the slowing downside momentum from their recent breakdown. So it's not as if we've seen them starting to base out or showing slowing downside momentum. So I still think, we're at least a quarter away from seeing any kind of basing process or slowing downside momentum to suggest that you have a cover short bottom fishing bar setup.
Okay, except the bottom perhaps in a quarter, not the best time to bottom fish as yet on IT. But Lawrence, this year metals have been shining fairly bright, whether it's the global metal prices and the commodity prices or the stock prices back home. Within the metals basket, is there any specific name that you would want to highlight?
I'll stick to the underlying commodities, but just sort of highlighting, in the base metals in particular, both the copper and aluminium breakout, momentum's confirmed the highs for those metals. So we do think that there's further gains and big breakouts from consolidation patterns there. And on the gold side, we're still looking at 2,500 to 2,550 as the upside target from the trading range you broke out earlier this year, which was basically in place since the August 2020 highs. So those three metals really sort of stand out with momentum and further gains.
That, Lawrence, the one segment which has done really well in the Indian markets and continues to do so is the larger PSU pack, and I'm talking ex-banks here. And within that, of course, there are a lot of individual cases, defense, manufacturing, a lot of these allied energy themes, etc. Any charts that look interesting there to you?
Well, I'd go back to that PSU bank comment that I made earlier on, and if we have to extend that to the broader market, definitely the public sector side, the PSU side, does show significant re-rating that started from 2020, and we think we only sort of halfway or 1/3 of the way through that re-rating process. So definitely PSU banks as well as the broader PSU companies, I think, are key leadership going forward within the India market.
Okay, and where within Nifty do you now then find leadership and the laggards? You've already talked about individual cases within private banks and of course IT that you believe is going to weigh down heavy. But what about the leadership, stocks within Nifty?
Yeah, look, so again, sticking to the sectors here, most recent rollover and a sector to avoid is the pharmaceutical side. That had been a great outperformer over the past 12 months, but that's clearly rolled over, broken down both in absolute and relative terms. So I think pharma is one that joins the IT sector in a de-rating process and one to avoid. And then, like I said earlier on, I think some patience on the bank side to slowly accumulate in that space, because that would lead the breakouts and the more sustained breakout that we see at the Nifty level, towards the end of this quarter and into the third quarter, rather than be an imminent breakout in the next week or so.
All right, then those were some investment mantras to get your day started. But then let's take a look at some news and updates coming in from the world outside of the world of stocks. Then if you thought April was hot, May is expected to be hotter. IMD issues a red alert for 6 districts of Karnataka as temperatures may cross 46 degrees. Heatwave surge expected in Gujarat, Maharashtra as well as Rajasthan for 8 to 11 days in May. Moving on then, Congress veteran Jairam Ramesh quells suspense on Amethi and Raebareli, says the announcement on seats will be made by today. Leader says not afraid of anyone. Congress sources suggest that party will be fielding Gandhi face from the seats then. Moving on, the Election Commission of India has barred former Chief Minister and BRS President K. Chandrasekhar Rao from campaigning for 48 hours for making derogatory and objectionable statements against the Congress.
Let's move on then. And the Supreme Court has stressed the importance of abiding by the rituals and ceremonies prescribed under the Hindu Marriage Act, failing which the Apex Court said that the marriage would be declared invalid even after it has been registered. And in the world of news, in the world of sports then, and the latest from the Indian Premier League, the Punjab Kings defeated the Chennai Super Kings by 7 wickets. This marks the 5th defeat for the Super Kings in 10 games. Punjab's Harpreet Brar emerged as the top player for the match as he scored 2 wickets during his economical spell.
Well, Punjab Kings definitely hit it out of the park, Snehi. But with that, we're out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in. The market takes all of the action forward.